Okay, 7 steps in calculating your income taxes. I believe I mentioned previously there used to be 8. There used to be exemptions for each family member. They were in the neighborhood of 3,000 something each, and the standard deductions were much lower. But the effect of this was to part of uh, uh, substantially reduce the number of people who are able to benefit from itemization. So the first step in calculating your income. So add up your sources of income to get your total income. Subtract your exclusions to get your gross income. Subtract adjustments to get your adjusted gross income. It's also referred to as AGI. So subtract either the IRS's standard deduction for your tax status or your itemized deduction. So you can. There are two. I'll have them. They're in the slides later. I think 14,600 is a single and a 29 something for married. So you can itemize, but especially if you think of a married couple, for the average person to come up with $29,000 of deductions to more than $29,000 to benefit, it's unlikely that most people will benefit from those. Next 5, apply your taxable tax rate schedule to your preliminary tax liability. Subtract tax credits for which you qualify. And by the way, there are 2 for education. So, and we'll talk about those in a little bit. And then subtract the amounts withheld for earnings over the year and calculate whatever you owe or your refund. The figure 4.2 restates the steps. So you've got total income. So you subtract exclusions to get gross income. You subtract adjustments to get adjusted gross income. You subtract your standard deduction or itemized deductions to get your taxable income. Apply your tax rate or tax table or tax rate schedule and get your preliminary tax liability. And if you use software, this is exactly what they're doing with the information that you enter in, whether it be TurboTax or TaxAct or any other number of software. So subtract credits. The nice thing about credits are dollar for dollar deductions from your tax liability. You get your federal tax liability and then calculate your balance owed or your refund based on what you've already paid in. So calculate step 1, going back through the steps. So earned income, income derived from active participation in, or any work that you do, wages, salary, tips, commissions, and bonuses. All these, actually, they're all mentioned above. So next we have a W-2 form. This is most of you probably received 1 or more of these during your lifetime. So it has your wages, tips and other compensation. You got Social Security wages. So if you were over 168,000 something, there is a tax rate summary in the material for exam 1. I recommend you take a look at that. There's a lot of good information on taxes, deductibility, and tax rates, and so forth. The Medicare wages. Medicare actually goes up if you make over $200,000. So that would, I guess, theoretically make it progressive. for some people. So so then you have your federal taxes withheld. There's also places down here for contribution to retirement plans, state and local taxes, the different various things, life insurance contributions, and so forth. You can, some folks can put are able to buy life insurance through their employer. The one thing about it, that is, if you buy life insurance through your employer and it's deducted, then when you receive it, you would pay taxes. If you buy life insurance after tax, then those benefits are not tax deductible. Okay, we'll start the next lecture with gross income.